Hello, Omid is here. Today we are going to see an example for a vehicle. We use it like a bank uh, with insurance company. We call it IUL or Index Universal Life. I will make another video to explain what is IUL with more details, but here's just an example. You can use it as a retirement plan for yourself if you're older age, or like a bank. You can borrow your money or use your money anytime you want when you put money here with a good interest rate. Here, just explaining for someone has a kid, and there are other options out for college fund, put in money for your kids if they want to go college with government. All are good, but there are sorry, better option there. Couple important things about IUL to know. If you do it correctly and follow the IRS regulation, it is tax-free income. So you have access to your money tax-free, and it's very important because when, for example, you have IRA or 401k, you pay tax when you take it out, or any other investment, bank, whatever. Is the only product, not the only. Roth IRA is tax-free too, but it is tax-free if you do it correctly. Second, it is your money. You can use it for anything. It doesn't have to be only for college. You can buy a house, you can take it and go vacation, whatever you want to do, it is your money. And then guarantee to you don't lose money when the market goes down. So your money is not in the stock market. You're gonna get interest rate by stock market, but your money is not in stock market. So for example, this year market is down 25% for 401k. Guess what? If you had one of this product, you lose nothing. It's gonna stay flat zero. And then the market go up, you go market up. And in average, historically, in last 30 years, people make between 7 to 10 to 12% interest if they did it correctly. So it's a very good vehicle. So it's come with the death benefit, living benefit, and then cash value, and also you can use it for it's coming with a disability and other stuff too. You can add it, and also can transfer to whoever you want in your family for free. So if you have any other investment, something happened to you, you pass away, you want to transfer it to your kids, you're gonna pay big tax. Here you can transfer tax free. For example, this is for kids. I have for my girl Binational Group, one of the best company for IUL. There are great company out there. I'm partnering with a couple of them. It's just an example. National Life Group been around for 174 years. When I explain one example for kids, for example, my girl, okay, is just an example. So to see what's the option, if you do one of this for your kids, I promise you, they're never going to have problem with money again. Anytime they need money, they can take it or they can borrow it from here. They don't need bank. They can come and take it from themselves. So let's start it. Just the name here, my girls, and just a fake birthday, just a girl with the 1 years. And now there's something you need to know about IUL. IUL did not build for that benefit. If you want to hire that benefit, please don't use that product. Some agents recommend you, but it is wrong because if you put it high, that benefit is just good for uh, your agent. It's gonna get high commission. This vehicle built for cash value, so you have to get a minimum debt benefit by IRS. They allow you to get tax free if you get the minimum required based on your premium debt benefit. So that's the best. Second part is important. Here, that benefit can be level or increasing. Increasing, it's much better because you can get more money uh, uh, get more interest. So this is important to know. Let's do it 61. Okay. Now, what that mean is it started with the little death benefit, and then going up when you grow up, when you get older, your death benefit increase, and then after age you put here like 61 years old, you don't have mortgage at that time, probably you don't have kids, you don't need a higher death benefit, you need money, so you can change it to go decrease again. Here's just an example. I start my kids account like this. Like you want to invest $100 a month in their account. Cool. For 20 years, just an example here. I'll pay $100 a month for my kids. Cool. And then after that, she's 21 years old. She's gonna go to work. I'm gonna give her policy as a gift. Hey, here's your policy. You can do whatever you want with it. She's gonna get work order and then, for example, pay $200. And then after 20 years, she's 41 years old. 300 is nothing, but just an example, increased it to $300 to see how's that work. We sold it for retirement, but you can have access to that money anytime. I put it age 70 to 90. So that is the time you want to take retirement. Let's see how's that gonna look like. Quick view. Okay, it start with 161,000 death benefit. Good for a kid. And it's not MIC. MIC is that when you did not follow IRS government's rule, then you have to pay tax. If it's NA, it means you don't pay tax because you did it in the right way. So that's just an example. Now let's see what is coming with this policy. Okay, so you can see here, let's make it a little bigger for you guys. It's just a name here. Started with the $100 a month, and then if something happened, for God sake, tomorrow, $161,000 death benefits come to beneficiary. If live long, you need money. Age 74, just an example. $700,000 is there. 899, 2,860,000. I go through numbers. And then if you have terminal illness, critical injury, critical illness, you can see the number here. You can have that money. So if you got sick, you cannot work for 6 months, you know what? I go to my insurance company and I get monthly pay, $27,000, cool. All happy with that, Now let's see the number, how's the number works. Cool. Here you go. Okay, so you can see here a monthly $100 investment. Age 1, totally annually $100 a month is going to be $1,200, and death benefit is going to be $162. The first 10 years, most of the money doesn't get a lot of interest because go for cost of death benefit and cost of insurance, and after that start to accumulating, but you don't lose money too. You can see end of 10 years I paid $1,200 and then $12,000, sorry, and then you have close to $12,000 here. And also you have $173,000 death benefit. Let's go see after 30 years. My girl is 30 years old. She totally paid $48,000 here, and her money grows to $96,000. Now she's 30 years old. She want to buy a home. She can use here for down payment. She can take that one for down payment. She want to buy a home. She doesn't need to go to bank and borrow. She can come here and take it. And there are a lot of different ways to take that money. The best way is to take a loan from that money. So if you take a loan, you pay 4% for the loan, but your money is there and gets 7 to 10% interest. So, and you don't have to pay that loan. It's a wash loan. It's gonna be there and it's gonna pay off by your interest. And if didn't go more than that, it's gonna use your death benefit. This is another details I'm gonna explain later. So you're gonna have $96,000 there plus $256,000. Now let's go. She's right now 40 years old and totally how much? $72,000, and her money grow to $212,000, almost 3 times. And also the death benefit went $530,000. This is not only for death. Remember, this is for living benefit. If you got sick, you can use that money. If we go down, let's say 60 years old, she stopped to pay money. You can change that anytime. It's just an example. Totally paid $144,000. She has $879,000, and she has $1,143,000. Did you get that? You paid $144,000. You have $879,000, and you have $1,143,000 death benefit. Now she's at age 70. She want to take retirement. How much she can get? She paid totally. She didn't pay anything else. $144,000. The first year, very first year, she can have $143,000 income, tax free, plus she can take another $143,000 loan. Also, she still have $1,492,000 in her account. You never run out of money in this plan, okay? It's going forever. And she has $1,739,000 death benefit. Cool. Now she lives until age, let's see, age 80. Now age 80, she still didn't pay anything more, $144,000 totally. And then so far she got $1,573,000. Did you get that? You pay totally $144,000 in your lifetime, 60 years, and you already got $1,573,000. Also, you can use that loan, this much loan too. Still, you have $900,000 in your account and $1 million in your death benefit. Guess what? If I pass away, she passed away when she's 80 years old. She already used that much money, but she already has this money to go to her family. So still, her family is gonna get $900,000 plus $1 million. So $2 million is gonna get from the policy I opened as a grandpa with $100 a month. It's $100 a month for her. Her family is gonna get $2 million, and she already used it $1,573,000. Let's say God bless her, she's gonna be alive until 90 years old. Cool, great, you know, we are Persian, we're not gonna die. So until 90 years old, she just invest $144,000. She already used $3 million, got income $3 million. Still, she has $42,000 and $300,000 death benefit. 144, $3 million. How many time? How many more? How many more? That's gonna have money. Let's say she's alive until 100 years old. Guess what? She can use again if she wants. Let's say she didn't use it. Her money is gonna grow back again. If you don't use it, your money gonna go up. Guess what? You are not 90 to 100 years old, you go nursing home or your family is going to take care of you. You don't need it. Still, your money is going to grow if you're alive. If you pass away, this money goes to your family. Whatever left over, gonna go to your family. So if you think or any better place to put money there and have this option, let me know. I do not know any other plan better than that. Come with the living benefit, always accessible. You can take it anytime. There is no penalty if you do it in the right way. There is no tax if you do it in the right way. You don't have to wait like for a 1K to become 59 and a half years to have access to it, then pay tax. You cannot touch it in 401k. If you don't touch it after 70, when you are 71 years old, you get 50% penalty to not using your own money. There is nothing like that. Give you all that, and you saw with $100 a month for your kids what they can have. Do you think that person gonna have any financial issue when they grow up with what I did, $100 a month? Well, this is IUL. I hope that helps. If you think this is a good vehicle to invest and save, can't call it invest because invest is risky. Here it's not risky. You can save for your kid, for yourself. Message me and we'll go through number together to see if that makes sense for you. We can help you. If not, at least you learn about the new product. Have a good day.